Okay, good morning and good afternoon, everybody. Again, happy Monday. Welcome to the BI Financial Policy Weekly Call. We got a lot of stuff happening this week, mostly in the regulatory space, in the congressional space. The one thing that I want to highlight is we are most likely going to see the House of Representatives vote on the Financial Innovation and Technology Act for the 21st century. This is the House Market Structure Crypto Bill that has come out of the House Financial Services and House Agricultural Committees that is spearheaded by Representative McHenry. We're mostly going to see the House vote. We're going to see the House voted on it this week. Most likely will pass, but then it's going to stagnate in the Senate. There's really no desire in the Senate at this point to take up this bill. Again, we don't have much odds on a crypto bill becoming law this year. Outside of stablecoins, still issues around that and so forth. And I think I talked about that last week, so I won't go into it this week. But just note you may see some positive crypto news later this week in terms of the House passing that. Now, let's talk about the regulatory stuff for the rest of the call. The first thing I want to lead off with is the Consumer Financial Protection Bureau. So last week, the Supreme Court actually, in a 7-2 decision, upheld the CFPB's funding structure as constitutional. For those of you who aren't aware, the Consumer Financial Protection Bureau is not funded through congressional appropriations. It's actually funded through the Federal Reserve. And the layman's way of thinking about it is the CFPB can essentially go to the Fed and say, we need X amount of money. Fed says, okay, great, here you go. And then the CFPB moves forward. Now, the reason why I'm bringing this up is now that the CFPB's funding structure is constitutional, the CFPB has been holding back quite a bit on both proposals and enforcement actions and is probably going to feel more enlightened for the rest of this year to move forward. So if you are in this space where you're being overseen or regulated by the CFPB, you may want to start paying attention to it a little bit more. Anecdotally, in fact, Bloomberg Law had an article just a couple of weeks ago about very small mom and pop stores effectively just ignoring the CFPB when they called and just giving them the cold shoulder. That obviously is not going to be very helpful going forward now that the CFPB is going to be here. Now, my colleague Elliot Stein actually has a couple more court cases related to the CFPB in terms of the credit card late fee program and the rule that came out. This case really doesn't impact that. That's more so of a legal case based off of just the Administrative Procedures Act and there are additional different authorities and so forth like that. So there are still lawsuits out there related to the CFPB. So if you are interested in that, just let me know and I'll put you in touch with Elliot. So last week we also saw the testimony from the banking regulators to the House Financial Services and the Senate Banking Committee. Real briefly, the one thing to note is it looks like the FDIC Chairman Martin Gruenberg is going to keep his position. I didn't see much in the way of Democrats really going out there saying you must resign. The language that was used by the Democrats were obviously they're not happy with the situation. But remember, if the FDIC chairman were to resign, the FDIC now goes into a 2-2 board, and it would be led by the vice chair, who is a Republican. So effectively negate any other banking regulatory rules that would come out this year. I don't think Chairman Gruenberg is going to resign. Instead, I think he's going to stay on. And as a result, I think this may be the end of the FDIC issues. We could see it certainly pop up again. There was actually an article this morning talking about the survey and how they're ranked lowest. But for now, I think Chairman Gruenberg survives. Now, the updates that I got from the committee hearings, I'm going to go through this fairly quickly, is on Basel III. Fed said, look, we're just not going to tell you when we're going to finalize it. Bloomberg News, remember, put out that article saying they were going to finalize it by August. Vice Chairman Barr essentially just said, look, we haven't made a decision. So what we're telling folks is prepare for the feasibility of August. If there are going to be changes, which he has said, Vice Chairman Barr also said broad and material changes are coming. As a result, he has said it's going to come to the operational risk provisions, the market risk, and the credit risk. It may look like an entirely new rule, but we'll see of whether or not they can get it done by August, but you need to prepare as if it's going to come out like that. Also, so along the same lines, the long-term debt proposal, all he would say on that, remember this is the proposal that's applicable to regional banks, all he would say on that is that there is a linkage between that and the Basel III endgame, that they look at it in its entirety. I took that to be that, if they decide to move forward with the Basel III endgame in August, then they'll probably move forward with the long-term debt proposal. And in fact, Chairman Barr just gave a speech a few minutes ago down in Amelia Island, Florida, where he insinuated as much, that the long-term debt proposal is somewhat linked to the Basel III endgame. On executive compensation, we've talked about that before. The Fed just said, look, we still have more work to do. Senator Warren actually blasted them pretty much for not going with the FDIC and the OCC on this. But again, I don't think the Fed's going to move on the executive compensation proposal. So I, again, don't see that happening anytime soon. Chairman Barr also reiterated that the discount window proposal is coming. This is a proposal that essentially would require banks to utilize the discount window in a way to disassociate or destigmify the bad feelings that one gets when they actually use the discount window. So Acting Comptroller of the Currency, Sue, has even said in the past that, look, the proposal could be as simple as requiring a bank to borrow $1 from the discount window. But they want banks to be able to borrow from the discount window so that if a bank actually needs it, then the market's not going to freak out and we're going to see lots of discussions about a bank's health and so forth. But they insinuated the discount window proposal is coming. On the debit card interchange proposal, also known as the Durbin Amendment, wouldn't give us any indications. This one is interesting because if you remember, the Durbin Amendment came out in 2010 and it capped debit card interchange fees. And what the proposal does is it lowers it to 14.4 cents plus 0.04% of a transaction. It's effectively wiping out billions of dollars of debit card interchange fees, good for retailers, bad for banks. Now, the vice chairman didn't say anything about in terms of doing this, but this is special because there's been a lot of progressive letters sent in against this idea, especially those associated with low and middle income advocacy groups. So we'll see if they have any effect. As of right now, I'm not sure they will. I think the Fed is still saying this is what they're comfortable moving forward with. But again, that's something that I'm going to keep an eye out over the summer. And last thing from the Fed side, liquidity coverage ratio. There is a proposal on liquidity covering. This is some rumor that's been going around for quite some time now. I would recommend reading Vice Chairman Barr's speech from this morning. He goes into liquidity in greater detail, just to give you an idea of what the Fed may actually propose, just because we do anticipate that coming out. Now, look, if it obviously does come out, it's not going to be finalized before the elections. This is just to get the ball rolling if and when Biden wins, election. Right now it's running so close. President Trump may win, President Biden may win, but they want to get the ball rolling. Now, the last two things I want to talk about is over on the SEC side. Chairman Gary Gensler gave a speech on Friday where he essentially said that they're going to repropose two rules. This is the broker-dealer predictive analytics rule, and the other one is the customer safeguarding of assets for custody banks. Now, for when it comes to the broker rule, the question here is, when I read that proposal when it came out, remember, this actually was the proposal that was based off of GameStop and all of the, gamification of markets that came out years ago. This is eventually what they came up with. And it was a rule that essentially stated that if you're going to use AI or data analytics to conduct essentially work with customers, you have to make sure that you're adhering to all of today's regulations about customers and regulation best interest. I actually didn't think the rule was actually needed when I read the proposal. I think it essentially just said, look, we want to make sure that you're adhering to already existing regulations, so we're going to put in this additional regulation. It just seemed kind of weird, and I'm not sure if it was really necessary, but seems that enough people have gone to the SEC and said something very similar, so Chairman Gensler insinuated that they're going to put out a reproposal. And then on the custody bank proposal, this came out, and a lot of the custody banks just said, look, the way that this is written is way too broad. You're going to actually throw in so much more under the rules authority here. It needs to be narrowed down. It needs to be tailored down. And Chairman Gensler's remarks, which you can find on the website, the SEC's website, seems to agree that they are looking at reproposing that. And again, if they were to repropose it, President Biden would have to win this November for it to actually happen in the next second administration. So last thing I want to say is no call next week. It's Memorial Day here in the States, so I'm going to say everybody have a wonderful weekend. If you're in the UK, happy late Bank May holiday. But again, please feel free to reach out to any questions or anything you'd like to chat. And I wish you a great week, and we'll see you in June. Thanks.